Well, good morning, everybody. Welcome to this edition of the PPP process, application update. We've been doing these things regularly, certainly over the last year. This is the second one in a week. Last week, if any of you had attended our session at that point, we told you that the new guidelines, or with the bill being in place, that new guidelines had to come out within 10 days. Those were issued last Friday, and so today we want to start to give you some detail as far as the program itself, the application process, and really what needs to happen there. We appreciate your joining us on this on the new format today. So again, being here on our YouTube channel, we opted to go this route simply because typically when we do this, we get so many people. And we max out, we exceed the number of people on our Zoom channel. And so, again, since these are complimentary, we just go ahead and thought we'd put it on our YouTube channel. That's where everybody ends up going to get it anyway. So with that, a couple of things to keep in mind. Number one, we are live streaming it. You're watching it on our YouTube channel. And again, for that, we thank you. Afterwards, we are recording it. So afterwards, you'll be able to find the recording for this there. You can go back and refer to it. We find out that there are a bunch of people who watch the program afterwards. One of the other things that you may want to do is, again, right below this window, if you click on subscribe and then also click on the little bell right there and hit all, what that'll do is we're going to be using this channel quite a bit this year. And so at that point, anytime we go live, you'll just get a notification that we started going live with another session, and you'll have the opportunity to join in. So anything we're doing on this channel is certainly free of charge and available to you. So again, you may want to go ahead and subscribe. But the other thing that you can do for us, if you don't mind, is just go ahead and hit that like button there, the thumbs up. If you do that one of the things that we have found is that we end up with a lot of people who didn't attend this session, hadn't worked with us in the past, but they found the information on the PPP program by doing a search. And by liking it, makes the program a lot more visible to other people who need the information there as well. One last thing. Again, I see at least one of you have already figured it out. I see the note coming through. You can use the comment section below. If there's any questions as I'm running through this material, feel free to go ahead and put them in the comment section below. I've got that in front of me, so I see somebody's already put out there, thanks for hosting this. So again, those come through to me. I will see them. And again, if I can, I'll go ahead. If there's any questions, I'll answer those as I go through the material here today. So, again, just down below, you've got my contact information literally right here, my name, email address. If you've got any other questions you want to contact me afterwards, we're going to pull that off of the screen, but we'll put it back on before we get to the end of the session if you have any other questions. So with that, let's go ahead and get rolling here and get into the meat of what we've got. So really what we're going to be talking about today is the Payroll Protection Program Round 2. Right, so again, that round 2 really came into being with the bill that was signed by President Trump December 27th, December 28th in there, and it really has a number of benefits for us, for you, right? For any small business owner that's here. This round of PPP funding may definitely apply if you didn't take advantage of the funding last year. It may also apply even if you did get funding and had that forgiven. And so we'll kind of go through some of those details that are there. Hey, Doug, see the note from you. Glad you're here with us here today. So a couple of different notes on the program itself. Just like round 1, loan forgiveness on PPP2 is not it's not automatic. You're going to have to fill out an application and apply for forgiveness. And again, the reason why they do that is because they want to make sure that you're using the program for its intended purpose. Right? In other words, you have to use it, and in the application process, you have to show them that you used it for qualifying expenses, that you just didn't take a vacation for it, things like that. If you did that, it's going to remain a loan. And so, again, as long as you apply for it and you keep your numbers in order and they're clean, the forgiveness process is actually fairly smooth. We walked through it here at Grandy and Associates, and it really didn't have any issues. It was a mere matter of I think we were about a week and a half to 2 weeks, and we had from the time that we submitted the application to the funds actually being forgiven on our account. So again, we'll talk a few more details about that later on in what we're doing. Now, with this new relief package, the timing basically said that the SBA had 10 days to issue guidance and new applications for this round 2. That happened last Friday, and basically lenders are able to start taking applications as of tomorrow. Now, for some of you, you may have heard that some institutions were actually taking applications as of yesterday. They did open it up, and they basically gave minority-owned businesses and women-owned businesses a 2-day head start. And part of the reason for that was because on the first round, some of those they were actually pushed back a little bit. They couldn't apply until a little bit later on. And so they gave actually them a little bit of a benefit on round 2. So starting tomorrow, lenders are able to take applications for the PPP2 program. Now, a couple of different notes on this one. Number one, there's $284 billion in the pool for round 2. Right, that's expected to cover, and I've actually got greater than 20%. I should had to correct that. It's less than 20% of small businesses across the U.S. So these funds are available on a first-come, first-served basis. It is open to first-time borrowers, meaning that you did not take a loan last time. It's also open to certain second-time borrowers and who already did receive those funds last time around. So we'll cover those. Just like last time, the PPP2 funds, right, and that's what's kind of being billed as PPP2. It's fairly similar to last time, right? So payroll costs, rent, covered mortgage, interest, utilities, all those things that we talked about and defined when we walked through this program last March, April, May timeframe. Now, they've added a couple of other items in there. You can also, covered expenses would also include PPE gear for your team. All right, you're having to buy the additional PPE gear as you go in and meet with your customers. That would be a qualified expense. Also, expenditures, and this is the way that it's the exact verbiage in the SBA's guideline, is expenditures to suppliers that are essential at the time of the purchase. To the recipient's current operations. In other words, further clarification on that means basically buying equipment that was already under PO with your supplier before you applied for PPP2. Right? So it's not you can't go out after you've gotten the loan or you've already applied for the loan and go out and buy equipment. Your supplier has to have had a PO in hand prior to your applying for the PPP funds, and it's for jobs that are going. You're not just buying inventory to put it in stock. It's for jobs that are already going in place. Next one was covered operating costs such as software, cloud computing services, and accounting needs. So really that opens it up, the services that you're using for your technicians, and any of those things. That now becomes as a possibly qualified expense at that point. And then last, you can use the funds to fix property damage due to public disturbances and riots, things like that happened last year that were not covered by insurance. Now, what is covered? Again, number one, you have to use at least 60% of the funds, just like the revised version of round 1. At least 60% of the funds have to be used for wages. Just like round 1 as well, you have the choice as the business owner to either use the funds over an 8-week period or a 24-week period. It's your choice. You can do it any way you want. I've got recommendations for you, right? And we'll talk about that here in just a second. But again, it's your choice which one you want to use. Use the one that benefits you more. Also, for most of us, in our world, it's going to be the same loan amount, pretty much the same loan calculation. 2.5 times your average monthly payroll. Now, the way that it states is 2.5 times your average monthly payroll in the year prior to the loan. right? And you notice I've got a question mark after that. Well, I've had to go back and I've done some digging, and in the clarification, what they state is that you can use your average monthly payroll for 2019. So in other words, the exact same numbers that you used for PPP1, if you've got that loan, or if it benefits you more, you can also use your average monthly payroll for 2020. Now, here's the thing. There's another caveat in here with this loan, and you'll see that in a minute. One of those is that you have to show that you had at least a 25% reduction in one quarter of 2020 versus 2019. Odds are, if your payroll for 2020 went up from 2019, chances are you didn't have a reduction in revenues coming in at that point in time. So if that's the case, then 2019 is going to be the year that you're going to use. A couple of other things is they did state in here that the SBA had to enact a simplified forgiveness process. There were a couple of areas that they learned from rounds 1 and 1A and 1B and all those additions that they put on it. They were actually fairly specific in a couple of areas. And so basically they're saying for any PPP loans less than $150,000, the forgiveness application cannot be more than one page. And basically, all you're going to have to verify is how many employees that we retained because of the loan, what amount was spent on payroll, what was the total loan amount, and again, they can't ask for additional information with that application. You're just certifying that the information that you're putting on there is true, and there's nothing more that you have to provide for that information. Now, if they suspect fraud, they can come back and require additional information for you. But for those of you that have loans less than $150,000, this process becomes much, much simpler. Yeah, again, they were also told they have 24 days from the date of that bill signing to issue a new forgiveness application, right? So we're still waiting on that one. We'll give you an update when that one comes out, and then you need to keep your records for a period of 4 years after this thing has been forgiven. So again, the PPP2, as we said last week, applies to first-time borrowers with 500 or fewer employees, sole proprietors, independent contractors, and those eligible self-employed individuals. Second-time borrowers, right? So if you got a PPP loan last year, there's some restrictions on you. Number one, again, maximum of $2 million that you can borrow. Have no more than 300 employees on your team. This one, you have to have used or will use the full amount of your first PPP loan before distribution of the second one. If you haven't used it all, you don't need another one. All right? And then the big caveat there is that you need to be able to show that you had at least a 25% gross revenue decline in any 2020 quarter compared to the same quarter of 2019. Right? So Q1, Q2, Q3, how did it compare to Q1, Q2, Q3 in 2019? If you could show a 25% gross revenue decline, and we'll talk about that and define that here a little bit more in a few seconds, then you would qualify for this second round. Now, for some of us, again, there's a lot of contractors that actually saw a significant increase in 2020. The thing to look at is, again, it's any one quarter. Right? So, for example, your second quarter, when all this stuff hit, you may have had a 25% decline, and then all of a sudden, third quarter and fourth quarter took off, and you went to the races. As long as you could show one quarter in 2020 that was a 25% reduction over 2019, you qualify. And so that's kind of the caveat that we have there. And then again, if you as a company returned either all or part of that previous PPP loan, that does not disqualify you from this one here, taking this one as well. So let's get into the actual application process. Last Friday, they issued Form 2483-SD, and we've got this on our Grandy Associates -Untangle page. Rock, our producer, at hand, will throw that link in the just in the comments. Again, it's www.grandyassociates.com/untangle. We have a lot of resources. We've been pointing people to that page for a year now. We continue to update that page. We've got a copy of this application that you can download from that page, as well as some additional information. So again, www.grandyassociates.com/untangle. untangle. All right. So let's kind of walk through the application and what looks a little bit different on it. You're going to see there's a lot of commonalities between this application and the previous one. There's a couple of areas that are a little bit that we at least need to be aware of. Right, so we're going to start out at the top, easy enough. The first section, what type of a company are you? Right, I'm an LLC, I'm a C Corp, whatever type of company you are, sole proprietor, partnership, go ahead and check those. Next, you're going to fill in, the business legal name and the address, the legal address of the company itself. If you've got a DBA, right, doing business as, or a trade name, go ahead and fill that in the upper corner, and then year of establishment. Again, for a corporation, you can go ahead. What year did you incorporate? Fill those in. Now, this one has a little bit different field on it, right? It's asking you for your NAICS code. Right now, if you're not familiar with this code, or you don't know what this is for your business, this code, first off, you can find it easy enough, right? So you can go to this website, www.census.gov/NAICS, right? And just for reference, Rock, if you want to throw that one in the chat as well. So again, when you go to that page, the NAICS codes are a way that basically they can group similar type of companies, right? And the reason it becomes important here is because there are provisions in here for those types of companies where their NAICS code starts with 72. So restaurants, things like that were completely shut down, where we can use 2.5 times their monthly gross monthly payroll. They can use 3.5 times. Right? There's other NAICS codes that flat out don't qualify at all. And so again, we've got those available. If you're not sure what your code is, you can simply go to that link, the census.gov/NAICS. It's going to take you to this page. All you need to do is come right up here in the corner, type in, one word, right? What's a keyword? In my case, plumbing, right? When you key that in, you go ahead and at that point, hit enter, click on search. It's going to give you a list of all the NAICS codes that apply, right? Well, I'm a plumbing contractor. Right there's my code, right? 238220. Right, and so just pick the one that applies to your particular company. If you're not familiar with it, that's the way that you're going to do it. That helps, again, just put you in that group of contractors. I'll come back out here in my NAICS code, list that one, and we're good to go. So that's really all we have to do. There's really none of the trades industries that are going to be excluded from based on the NAICS code. Again, we've got a number of people who have found us and attended these sessions just from searches and that stuff. So those of you that fall outside of the trades industry, make sure that you're looking at that. Again, restaurants, some lodging, hotels, places like that. Again, you actually qualify for 3.5 times monthly payroll, not 2.5 times like the rest. So we're going to put that in. You're going to list your company's EIN, your number. Go ahead and put that in. What's the company's phone number? And then the primary contact and email address for the company itself. Simple enough on those particular items. From there, let's move down the application just a little bit more. Now, first off is, again, that average monthly payroll. Now, last year when we went through this on round one, this was kind of confusing. Right? I mean, what qualifies for it? Well, we've been through this once already. And so the process is, again, much simpler. What was your total payroll? Right now, again, you can use either 2020 or 2019. If you're using 2019 and you already got a loan last year, just use the exact same numbers. All right, so what was your total monthly payroll? Now, qualified payroll has changed ever so slightly. Right, so it's still qualified salary, wages, commissions, any compensation, cash tips, or anything equivalent is all considered payroll. Vacation pay, parental, family, or medical or sick leave qualifies, excluding leave under the FFCRA, the Families First Coronavirus Relief Act. Right, and so in other words, if you've got somebody off and you're already applying for that, that does not qualify under payroll because it's covered under a different program. Any separation pay. In other words, you had to let somebody go and you came up with, you gave them a severance package, right? That would qualify under payroll. Employer portion of the group health insurance qualifies. Now, they've also added this time around the employer portion of any group, life, disability, vision, or dental plan. So that would qualify in there as well. And so where we didn't have that on round one. And then just like last time, any company portion of the retirement benefits, those would also go in there as well. So again, that all you add all of that stuff up. I think we've got in here. The other one that I didn't list on here that is there is again because the question keeps coming up. What about the withholding, the federal unemployment, the state unemployment, Social Security, all the rest of that stuff? Only state and local employer matching taxes qualify. Federal, FICA, Medicare does not. Right? They're saying you got the benefit of that on your taxes anyway. You're not going to get it in this particular program. So that portion of it is not. It's only the state and local taxes if you have locals that are there. For independent contractors or sole proprietors, again, it's any wages, commissions, any income, net earnings from self-employment or similar compensation. Any of that is what you would qualify if you are independent contractor or sole proprietor. Now, just like with round one, it's only wages up to $100,000 maximum. So if you have any employees who earn more than $100,000, if you as the owner earn more than $100,000, then they're thinking, look, you don't need more money than that. So you limit it at $100,000 per employee at that point in time. Again, you can use either 2019 or 2020 payroll numbers. It's your choice. So calculate them both. Use the one that benefits you most. Either one will qualify. For 1040 filers, again, you're basically looking at Schedule C is what you're going to look at. Again, your payroll costs are basically computed using line 31, the net profit amount, right? Because if you're a sole proprietor at that point in time, it's whatever profits come in is my income. And so that's where you're going to find your numbers. You simply take that total annual payroll cost divided by 12 months. That gives you your average monthly payroll for the year. All right, so we're simply going to take that dollar amount, we're going to fill that in the first box. Next, we'll go back in it again. You're going to multiply that by a factor of 2.5, or, again, for those who have NAICS codes of 72, starting with 72, you're going to, at that point, multiply by 3.5. So we multiply that out. That comes out to a loan amount of $63,075 in this particular case, and we list that one in there. Next, how many employees do we have on the team? So again, we still go back to and use the same guidelines that we did for PPP 1. Again, when we did this last year, we had no clue. What do they consider an employee? You know, if it's a part-time, is that one employee or is that a half of employee? Well, again, use the same general guidelines that we did last time. So again, the full-time equivalency that we had looked at using it. So one of the options that you had there is the simplified version was if they work 40 hours a week or more, that's 1. If they work anything less than 40 hours a week, that can be counted as 0.5. Right? Or you can go through and technically calculate, okay, this guy's working 30 hours a week, so that's 0.75 employees, and calculate it out that way. You can use either method there, but how many employees do you have on your team? Next section here in this middle, right here, what are you going to use these costs for, right? The purpose of the loan. Select all that apply. Now, here's my recommendation, right? You can list, right? Because again, qualified costs are payroll, rent, or mortgage interest, utilities, right? Other covered expenses like the PPE equipment, damage to the property, supplier cost, all these other items, right? You can use all them. But here's the thing. You're getting, in this number, 10 weeks worth of payroll. You can choose between either an 8-week period or a 24-week period. Do yourself a favor, only if you say you're going to use it only for payroll costs. You've got 10 weeks worth of payroll, use the 24-week period. Certainly you're going to use 10 weeks worth of payroll over that 24-week period. You can then say 100% of your funds were used for payroll costs. Here's the advantage of that. When it comes time for forgiveness, and the same thing applies even on PPP 1 if you haven't applied for forgiveness yet today. If you only list payroll costs, then all you have to provide documentation for is payroll costs. If you list that you're going to use it for rent or utilities, now you have to provide all of the backup information for those areas as well. Right? Which means, for rent, every one of my canceled checks. Oh, and by the way, the signed lease that I had that was in place as of February 15, 2020. For utilities, it's every single bill that you got from the utility company, the cell phone company, the electric company, any of those people, and then all of the canceled checks that go along with them, right? It's just a lot more work. Do yourself a favor, and if you just list payroll costs, you got 10 weeks worth of payroll, you've got 24 weeks to use it in. All you have to come up with is payroll documentation, and that's it. It makes that process much, much easier. So again, check what are you intending to use it for? You're going to put that in there, right? So in my case, it's payroll costs. The next one, your PPP first draw SBA loan number. So when you got your PPP loan the first time, you actually had two different loan numbers. The first one was from your local lender, and that could be any form, and then you had a 12-digit SBA loan number. If you don't know what that is, go back to your lender and get it from them. They absolutely have it. Right? So what was the PPP loan number from the SBA? That 12-digit number is what you're looking for on this particular loan. Now, again, as I'm going through this, again, I see a couple of another comment or two coming in there. Z, appreciate the comment. If you got any questions, don't hesitate to put those in there. Again, I'll kind of hit those as we go through this as well. In the last section, right here, we're looking at the gross receipts piece of the puzzle. Now, again, you need to be able to show that you had a 25% reduction in any quarter of 2020 compared to 2019. So first thing you need to do is state, okay, what is your reference quarter, right? So, and you're going to list it just like this, right? They even give you the example, right? So it's second quarter of 2020. The reference quarter is going to be the second quarter of 2019. It has to be quarter for quarter, right? I can't say, third quarter of 2020 and second quarter of 2019. So why they ask you for both, I'm not quite sure. There are a couple of caveats here. First off, if your loan is over $150,000, you need to identify the 2020 quarter that meets that requirement. You need to list, okay, what is your reference quarter? Right? You have to state what were your gross receipts for each of those quarters. All right, so what was your total revenue in that quarter in 2020, total revenue in that quarter in 2021? And then you need to provide supporting documentation to back that up, to prove that those numbers are true. For those of you whose loans are less than $150,000, again, they made it easier. And the reason for this was, the first time around when they looked at that, those PPP loans that were less than $150,000 equated, it was something like 25%, 24% of all PPP loan dollars, but it was 86% of all loans. So again, it takes care of the bulk of the actual loans that are out there. And so if your loan amount was under $150,000, these fields are not required. You don't have to fill them in. You just need to certify, and by signing off, you'll see here in a couple of minutes that as you're signing off, you're going to initial a number of items, and you're certifying that you had a 25% reduction in one of those quarters. You don't even have to say which one it is here. However, you do need to provide that information prior to gaining forgiveness. So my recommendation to you is, heck, you went back and actually pulled your quarterly P&Ls to show which quarters were lower, that you actually qualified. Just go ahead and put the numbers in there now, print the reports, put it with your application. You've already got the stuff that you need for the forgiveness side of the equation down the road. Right? You're doing the work, take advantage of it. Now, there is, right, and they don't talk about this too much, but in the SBA clarification that they issued Friday, there was an alternate option. And I found this interesting because I'm working with a contractor right now that this will absolutely apply to them. And that instead of looking at any one quarter in 2020 versus 2019, you could compare the annual revenue. right? So you could actually look at what was your total revenue for 2020 compared to the total revenue for 2019. And if you show at least a 25% reduction in that period, that would also qualify. All you need to do is list the reference period being annual on the application and what were the total numbers, and you're in good shape at that point. So again, for some of you, depending on how detailed your books are, right? I deal with a number of people, and in fact, one individual contractor I'm working with right now, they don't have month-by-month P&Ls, right? They have an annual one that their accountant gave them at the end of the year, and that's it. Well, if that's the case, again, I can just simply show that my annual revenue went down 25% 2020 versus 2019. That would still qualify me for this particular loan. Prior to seeing this particular contractor wasn't going to qualify because they didn't have any quarterly numbers. Right, so then there's a couple of other caveats, and we do get these questions that come in. If you weren't in business all of 2019, right? So and they break it down into three sections. So if you weren't in business in the first and second quarters of 2019, right? You went into business in either the second or the third quarter. You just simply need to show that your gross receipts in any quarter of 2020 were at least 25% lower than either of those third and fourth quarters of 2019. If you went into business in the fourth quarter of 2019, right, then you just need to be able to show that any quarter of 2020 was lower than the fourth quarter of 2019. And if you didn't go into business until really January through February 15th of 2020, then at that point you just need to be able to show that receipts in the second, third, or fourth quarter of 2020 were at least 25% lower than the first quarter of 2020. Now, it's going to be a little bit tough if you were just getting started at that point in the year, right? But again, if you remember, this loan carries through just like PPP1. You had to have been in business by February 15th of 2020 in order to qualify. The same thing applies here. All right, so it just kind of breaks down that segment for those of you who are a little bit newer companies. Now, the other question that's already come up to me is, what's considered gross receipts? Well, it's all revenue from the sale of any products or services that you do. It includes all interest, dividends, rent, royalties, fees, commissions, all monies that come into the company itself, minus any returns and allowances. All right, so that's the qualification that you'd subtract that from there. Do not include taxes that were collected that are just simply being passed through. In other words, like sales tax, right? I charge my customers for sales tax, I'm just passing that through. That is not part of your gross receipts. Also, there's a couple of other items that you cannot exclude from your gross receipts, right? Because the first thing that comes up here is, well, sales tax is a pass-through, but my subcontractor costs are also a pass-through, right? I collect that from the customer and I pay the independent. No. Right, that's part of your revenue. So you cannot subtract subcontractor costs, reimbursements for purchases of a contract that you make as a contractor on the customer's request, right? So they asked you to buy this part or any of these materials, and then they're going to pay you for it. That's part of your receipts. Any investment income or any employee-based costs such as payroll taxes. So again, those things cannot be subtracted from your gross receipts. So we come back to our application, right? I'm using the second quarter of 2020 compared to the second quarter of 2019. I had $250,000 in total receipts in 2020. Back in 2019, I was at $320,000, and so as a result, that is my quarter with more than a 25% reduction. Now, from here, we go down a little bit farther on the page. All this, it's a one-page application for the most part, so all of this is on one page. The next section right up here is if you have, you have to list, any owners with 20% or more equity in the company. And so if there's more than two, then attach a separate sheet that shows what their percentage is and basically their percentage of ownership, their social security number, their address, it's their home address, that's what you're putting on here, and you're going to list that in there. Then comes down to really a page and a half of certifications, right? So there's first off a couple of questions, and these will look really familiar to the very first round application, right? So what we're doing is the applicant or any owner of the applicant presently suspended, disbarred, proposed for disbarment, or ineligible for an SBA loan, right? So again, you have to be in good standing. Second, so again, you're simply going to check yes or no. Has the applicant or any other applicant in the business owned or controlled by any of them ever been obtained a direct guaranteed loan from the SBA, right? Is there another SBA loan that you've already got and you defaulted on it? Right, so if you got a loan, no big deal, but if you defaulted on it, that tends to be a problem. Third one is the owner applicant in this business or any other business have common management including management agreements with any other business. If so, list those other businesses. So that needs to be on a separate sheet of paper. Is the applicant or any owners that own more than 20% of the company presently incarcerated, basically for any felony, right? Yes or no on that one. That would preclude you from it. Next one, within the last 5 years, have you been involved in in fraud, bribery, embezzlement, been convicted of any of those? Again, that would be an issue there. And then last is the United States, the residents, right? It's only for U.S. residents that can apply. Is it a franchise, and are you listed in the franchise directory, right? So you're going to list those. On the second page, right, so those were pretty much the same as what they were on the previous one. Here's the second page is the certifications, right? And there's a couple of different things here. So it's kind of wordy. You've got that behind me. In effect, these are fairly simple, right? So the first one, I've read the statements included on the form, and I agree with them. I understand them, right? Second one is, I'm eligible, right? I'm certifying that I'm eligible to receive this loan under the rules that are in place as of the time that you are filling this out. Third one is, that I'm an independent contractor, self-employed individual, sole proprietor with no employees, or as a company I have more than 300 employees. All right, so I'm agreeing to that one. The next one, I'll comply with the terms of this loan. All right. The next one, all loan proceeds will be used for business-related expenses that are qualified expenses. Right. The next one says, I understand that the SBA encourages the purchase of American-made equipment and products. And last, that you're not engaged in any activity that's illegal under federal, local, or state law. So you're basically certifying that all those statements are true. The next thing is you got to initial a couple of areas, right? So these here, if you look at the application was in business as of February 15, 2020, and is not permanently closed or you're not eligible for any of the other programs. For example, there was a lot of businesses that were flat out just shuttered, right? Because of shutdowns and things like that. And that again, you're a qualified individual, right? So you're certifying that, you're agreeing with that by initialing it. Current economic uncertainty makes this loan necessary to support the ongoing operations of the applicant. Again, that question came up last time. It was on the PPP-1 application. And again, any one of you can argue that, hey, because I had a 25% reduction in revenues, that had an impact on your company. And so that in itself would qualify you for this. So you can do that one. Next, the applicant has realized a reduction in gross receipts, right? So you're certifying that is true. Right, and again, for loans greater than $50,000, you provided the documentation. For loans less than $50,000, you're basically you're initializing this and you're signing this form, and that's your verification, your certification that that's true. All right, now again, even if you don't provide any other documentation, before you can get forgiveness, you have to be able to provide that information. That again, application received first draw PPP loan, and in effect, those funds have been used or will be used before this disbursement is made. Last, the funds will be used for to retain workers, maintain payroll, and pay qualified expenses. That you're not going to use it for anything other than that, and doing so would be considered fraud. So again, easy enough done, right? You're going to sign off on each of those particular items. There's a few more that were underneath there. Couldn't get them all on one page. Understand that loan forgiveness will be provided for the sum amount, but you're going to have to provide information verifying that at least 60% was used for employees themselves. The applicant has not or will not receive a second PPP2 loan, right? I had to think about my wording there. You're not going to apply for another one. And the president or vice president or head of the executive department or a member of Congress or the spouse, right, you're saying that you're not a government employee on this last statement. So the question that Jason just asked is, on the application, do I enter the number of employees I have today or the number I have averaged in 2019? The number of employees that you have today is what you're putting on this loan. Right, so that's a good question, right? Because on the the payroll costs that you're looking at, we're back at that point in time. That's what's getting that basing that number. But how many employees do you have today is what you're going to put on there. Good question, Jason. So that's really the application itself. Now, again, that's the information. A number of the lenders that are out there are going to are already putting this stuff into their online portals. Again, as of tomorrow, they can start applying. If you're looking at this one, don't dawdle. Again, there's limited funds that are here. For PPP 1, the first go-around, I think there was like $380 billion. That was gone in a matter of weeks. Right, so again, I think it was like 5 weeks, 6 weeks, something like that, and those funds were used up. Now, part of that was because of those very large companies that were taking loans for $10 million that really didn't need it. All right, so those are actually capped out, but again, second-time borrowers, it's a maximum of $2 million is what you're going to have. So it should help us a little bit, but again, it's forecast to cover less than 20% of the businesses. Now, when we get to the application process, and just a couple of notes, applications for not only PPP 2 but PPP 1. A couple of things there. Number one, again, remember those qualified expenses, right? Payroll, utilities, rent, mortgages, fuel for the trucks, all of those things. But again, you can choose. You got 10 weeks worth of payroll, and you have 24-week period to use it in. If you list, again, that you're going to use utilities, rent, mortgage, any of those things, and even on the forgiveness application, if you list that you're using it for and you list the rent and you list the utilities and any of those things, then you have to provide all of the documentation for it. Do yourself a favor, indicate that you're only using it for payroll. Utilities, rent, mortgage, interest, just put zeros in those boxes. You didn't use any of the funds for that. That way, the only information that you have to pull up, the only documentation that you have to provide will be for your payroll expenses, and that's it. It will make your life a lot easier. Again, only submit for payroll. Also, on PPP 1, if you received an EIDL grant, that was early on, you could take out apply for the EIDL loan, and you could get up to a $10,000 grant depending on your payroll. If that's you, and you got that, and then you got PPP, an actual round 1 PPP loan, in the forgiveness of process prior to last week, they subtracted the amount of the grant from the portion of the PPP loan that would be forgiven. They wouldn't allow you to double dip. With this bill that was signed by the president just before New Year's, that has now changed. And so hang tight, push pause if you haven't already submitted for forgiveness, because at that point in time, once the new applications come out and the new guidelines come out with it, you will be able to have that forgiven as well. You will not have to list that on this application. Now, if you've already submitted for forgiveness, and maybe you've already received your funds, but you listed that grant, and so they deducted that from the forgiveness amount, they will have a process where you can reapply, you can amend that application, and in effect get that grant amount forgiven as well. So that's coming up. When we get more details, we'll let you know about that one. Also, a couple of other tax implications that came out here, again, regarding the PPP funds. As a result of this bill, again, and I mentioned this in last week's session, but want to just recap it here again. The original intent of the PPP program was that those funds would be non-taxable. Right? And then in April, the IRS issued a ruling, and in November, they doubled down on it, basically saying that, no, the PPP funds would not be taxable, but you can't write off the expenses that you use those funds to pay for. In other words, that portion, those 10 weeks worth of payroll expenses, you couldn't take a write-off for. And for many of you, that meant an increase in your tax bill of 6 digits or more. Right? So it was going to be huge. Well, now as a result of this, they have verified that was not the original intent. The PPP funds are not taxable, and the you can still take the write-off for the expenses that you use to pay those funds on. Incidentally, that just reminds me, we talked about gross receipts earlier, gross revenues coming in. If you receive PPP funds in 2020, that's not counted towards your gross receipts. That is not factored into that equation at all. So again, at this point for both PPP1 and PPP2, the funds are not taxable, and you can still take a write-off for the expenses that you're paying with those funds. 100% deduction for meals, as long as they're provided by a restaurant or a catering company, starting January 1st, actually that's 2021. It just started at the first of this year, going through the end of December 2022. And one other item that, again, I'll just bring up as a quick recap. If you had a second or a separate SBA loan, right, a Section 7A loan through the SBA, with the CARES Act that was signed last year, they made the payments for you for 6 months. Right, so you just quit getting statements, and the SBA literally made the payment for that SBA loan for a period of 6 months. This act that was signed last week states that, it clarifies that the interest on those payments that were made is still deductible. So if that's you, that's another benefit for you. Even though you didn't make the payment, you can still take a write-off for the interest that was paid with those payments. And they've extended those payments for another 3 months coming up here in 2021. So that's all in this bill that was signed last week. So kind of as we recap and bring this to a close, again, if there's any other questions that are there, again, by all means, put those in. Again, we've got the resource page that we have out here, grandyassociates.com/untangle. We keep out there. I've updated this. Actually, this graphic has changed, so we've got information in there. That's where you'll find the new application for this loan. I would be talking to your lender today. Don't wait. If you think you're going to take out PPP2, take out that loan or talk to them today. Because starting tomorrow, they can start processing applications if they're ready for it. Now, some lenders may not be ready. They're going to say, well, hang tight till we get our online portals ready. Right? But again, I'd at least have that conversation with them sooner rather than later. One of the other things, for example, I talked to our lender, and because again, our loan last year was already forgiven, that's in place. He just said, send me a copy of your P&L for the quarters of 2020 versus 2019. And for some lenders, they're going to make this process really, really simple. They're basically going to say, look, all you have to submit to us is the verification that you had a reduction in revenue from 2020 to 2019. We already have all the rest of your information. You don't have to fill anything else out. So talk to them, find out what they're going to require from you. Again, we'll put updates out here for this. We're going to post the link for the recording for this session. We'll go out here. That'll be out there probably in about 45 minutes. We'll have that in place. And then also, again, as we get more information on the other elements here, right? So the forgiveness application, any more information on the EIDL loans, we're going to run more of these sessions. And if you want to be notified when we're ready to go live, again, just down below the screen here, go ahead and click on subscribe, and then click on the little bell there and choose all. And again, if you would do me a favor, if you thought this was helpful, just go ahead and hit the like button. That would be helpful. So we just had another question come in. Juliet's asking, what are the specific documents needed for businesses that receive the first PPP loan? Right. So at that point in time, the documents that are going to be needed are going to be really a copy of the P&L by quarter showing 2020 versus 2019, verifying that that's the case. Some lenders may actually require that you actually pull the schedules out of your tax bill that you filed that actually shows the revenue decrease. Now, obviously, you haven't filed taxes for 2020 yet, so that's where they're going to be working using your actual P&Ls for that information. From there, when it comes time for forgiveness, you may actually have to show that actual form, the schedule from your tax bill that showed the actual verification of that reduction if your loan was less than $150,000 or more than $150,000. If it's less than $150,000, you don't have that either. Let's see, what else have we got? All right, so one of the questions that did come up beforehand was on round one of PPP, I didn't show a profit in 2019. So I lost money in 2019, and so therefore it prevented me with my particular company from getting a loan. So that's one of those areas that I'm still digging into it to try and find that. Okay, and so there we go, right? So the question is just coming up here. Is it true that if your business shows a loss for 2019 and 2020 that you cannot qualify? I'm still trying to get clarification on that one, Vince. I've got to call into my CPA as well as my banker to try and get that information. I will reach out, and I'll actually put a post on here, a reply to that question on this recording, but I'll also reach out to you directly and just get back to you with what I hear back on that particular point there, because sure would be nice in that particular case. You're doing everything you can. Would love to see you be able to qualify for that one as well. So I will get you an answer on that one to the best of my ability. Let's see, just looking at any of the other ones that are in there. All right, so with that, that's pretty much everything that we've got. If see a couple of other questions, actually just coming in, Judy, please clarify the money received from round one, that does not get added back into the bottom line. That is correct, right? So the revenue from line, the loan amount from PPP1 is not considered revenue for your company for round two. All right, so that was offsetting some of the losses. So, Judy, that is 100% correct. It does not get added back into the bottom line for the company itself. It's not taxable. You can still take the write-off for it, which, again, that was a big deal because it was going to cost a lot of companies a lot of money in taxes for that piece of the puzzle. So hopefully that answers the question there. Wayne's asking, does round one need to be forgiven before applying for round two? It does not need to be forgiven, but you have to have used all of the funds before you can apply for a round two. Right, so again, if you got that message, and again, all of you certainly would have used all of those funds, right? Because again, it's been months since you could actually get that PPP1 loan. There's been more than 10 weeks that have gone by. You've used more than 10 weeks worth of payroll since then. At that point, those funds should all be used. It does not need to be forgiven in order for you to apply for a round two loan. So again, good question there. Anything else? I'll give it one more shout out here. And not seeing anything. Rock's going to go ahead and put my contact information back on the screen. If you have any questions after we leave here, by all means, you've got my email address right down here below, bill@grandyassociates.com. Will come straight to me. Also, again, my phone number is direct here for the office. Reach out to me there. Steven's asking a quick question, and then we're going to wrap it. Don't see anywhere on the application that we can just use the 2019-2020 numbers. Are you sure about that? There's no question. When you read through the application, you can use and I'm assuming, Steven, that what you're asking about is that for the payroll numbers, again, we can use the 2019 payroll numbers. Now, again, we may, depending on your lender, have to fill out another application using those same dollars, but you can absolutely use the same numbers that you used for 2019 on this application. So hopefully, if I didn't answer that one, let me know. Reach out to me, and we will do what we can to answer that with you. With that, guys, stay safe, stay healthy. God bless. Take care.